Welcome to Provaris Energy's Business Update webinar. Presenting today is Provaris's Managing Director, Martin Carolan, and Chief Technical Officer, Per Roed. Today's format will have the team discuss recent commercial and technical milestones, followed by a Q&A session whereby investors can submit questions via the function on the bottom of the screen. I will now pass to Martin.
Thank you, Mel, and good afternoon or morning wherever you are joining. We're coming in from Norway this morning. I'm based in Oslo at the moment, and Per's up on the west coast. So this update is about trying to provide shareholders with a bit more context on the commercial activities and where we are on our shipping and technical program. So we'll try and get through this within a half an hour and then open the floor for questions. So just quickly as a highlights overview, so we are a unique story in the hydrogen economy. We've been developing our technical solutions and supply chains for the better part of 3 years now, and we are now starting to see firm traction here in Europe after having started our life down in Asia and Australia. So the proprietary IP for both shipping and now storage, which is coming along in terms of our innovative ship design and tank IP, is now starting to set us clearly apart from other developers in the market. We are the only provider of a bulk gaseous hydrogen shipping solution. Our approvals that we've been working through for class have been going well to date. Mid-2024 is still our time frame. We see that a lot of focus from commercial partners and different activities we have are focused on that as a key milestone event, which can then convert to binding agreements. So the construction of the tank is going on, and Per will talk about some and give examples of some of the activities we're doing. We see that approvals it's a world first in terms of shipping IP, and we are starting to see quite a bit of focus around how we can then convert that to binding agreements, so give visibility to shareholders. And also with the tanks, we are now starting to see interest around first orders, which could be an exciting opportunity to produce revenue in 2024. The regional model that we have is advancing here in Europe quite well. We've been having to establish collaborations to accelerate that, both on the technical and the commercial side. We're advancing multiple commercial pathways here in Europe, and we are now participating across both hydrogen production, the storage, and the transport side. So we feel as though that the compressed hydrogen model is becoming to have strategic importance. Our safety, efficiency, and low-cost model for hydrogen from regional sources into Europe is now starting to have key focus. The energy transition goals are quickly moving ahead, and Provaris we see is the only viable way to import bulk quantities of gaseous H2, and particularly we've been focusing on the green molecules. So our credibility continues in Europe. We've seen increasing focus from utilities. We've been able to convert that interest into 3 MAUs, one of which we've been able to disclose as Uniper, which is one of the top 4 German utilities here and predominantly owned by the German government. So that is an important beachhead client. So we see ourselves as the lead importer of gaseous H2 into Europe, and that's now being evident of those 3 MAUs. We do have quite a number of discussions with other supply and offtake ends as well. Importantly, we remain what we see as the lowest cost supply option, and it's now aligned with what we call realistic scale to achieve investment decisions. The mega projects that have been announced over many years have started to come down in focus, and the scale of 200, 300, 400, 500 megawatt scale is now where the market is starting. And if you can be the lowest cost in that environment and solve for some of the issues, well, then we should be able to take investment decisions. So we are doing well. In terms of the assets, so our proprietary ship design is still world first. For bulk scale gaseous hydrogen carriers, we have the H2 Neo, which is now up to a capacity of 450 tons. The H2 Max is further down the path, but we see class approvals in 2024 could lead to construction and operation by 27, 28, subject to being involved in projects. The LEO still has significance both operationally for our own supply chains, but that is also available to other supply chains that need bulk storage, which you could have quayside. The flexibility and use of proven applications for both compression and terminals is absolutely relevant, because what that's doing is reducing the capital cost component of both loading and discharge. And obviously the extension of our tank IP into what we call small scale storage, but still large in the terms of the existing market. So 1, 5 to 10 ton capacity is a breakthrough for that industry. We talk about a platform of commercialization activity. So just a reminder that we are involved across the H2 production, shipping and storage elements. So we have our proprietary shipping solutions, which sits in the middle. We have ownership of that IP, advanced design and approvals. And we will work with ship owners to fund and operate fleets under long-term charter. So those fleets would be aligned with H2 production assets. So we've had the collaboration for H2 supply with Norwegian Hydrogen here in Norway. We are talking to others about other collaborations for supply projects, and those supply projects are on the basis of using our shipping solutions. So we are integrated and integral to those assets. Clearly, there are a number of hydrogen infrastructure funds seeking to invest in proven and advanced projects. And lastly, on the ports and distribution side, we've had to go out and source the market for ourselves. So those 3 MOUs we've mentioned for supply with utilities. We have now the collaboration with GES for the Rotterdam terminal. We are talking to other terminal operators in Europe as well. So the revenue sources and value creation for our shareholders to come from that is equity share in hydrogen production assets as they mature through their stages. We see license fees for our ship design for those ships going into those projects, and ultimately we should be able to demand and secure a share of those cash flows from long-term charter agreements. The supply agreements will obviously underwrite the projects for both supply and the shipping assets, so they are important. So we're not sitting back waiting for the market to come to us. We're going along the full supply chain. And on the right-hand side, we've got production of tanks. We have a joint venture here in Norway where we are undertaking the prototype. We see that facility having capacity to start producing and delivering tanks in the second half of this year. We have seen early indications of interest around 1 to 2 ton scale tanks. So the idea is that we have first sales beyond the prototype and start delivering tanks at the end of this calendar year, which sees first revenue. So we move from a 27, 28 revenue story to bring that forward to 2024. This slide we've had in our deck for a little while now. It is the basis of why we are relevant. So the simplicity and energy conversion efficiency of compression is what's demonstrating the lowest delivered cost of hydrogen. So while we do get penalized on energy density from a carrier point of view, when you look at the full value chain of what's required in terms of hydrogen energy to convert that hydrogen into a carrier, we're up to 10 times less in terms of that's what's required. And when that ship arrives and there's a reconversion process that takes place, delivering at gaseous format means that we use very little at the delivered end. So what that's doing is eliminating the complexity and high cost of other alternatives looking at refrigerated storage, be that chemical or liquid. So if you can lower the capex, use 50% energy loss, you are the lowest delivered cost. So that simplicity is what's cutting through. And I think this is where the focus is now in terms of the industry trying to look at capex and energy savings. We've been focusing over the last 12 months in Europe, but particularly on the German market. It's quite clear and evident in the reports that the government is publishing. They have total demand by 2030 to achieve multiple assets or pathways for their energy transition. They are phasing out coal, they've banned uranium, and so they are reliant upon hydrogen to develop and move forward. So with that, there is a clear requirement for imported hydrogen in the order of 1.5 to 3 million tonnes just within Germany. And then more broadly, we see a 10 million tonne market in Europe. So it's the steel manufacturers, it's the oil and gas refineries, it's power generation, and then longer term, there's markets for trucking and marine. So import infrastructure is being developed. They're tendering for H2 ready gas-fired generation, and the power utilities are investing in up to $100 billion to move forward with energy transition projects. And this all comes by 2030. So Provaris is now relevant as we are providing a low-cost source. Working in Europe is a regional model, so we are advancing on the supply front, and that's what's led to those MOUs with German utilities. The assets, like all regions we've seen in Australia, recent announcements around policy incentives on both capital and operating costs. So Europe established what's called the European Green Deal back in 2019. So they've been legislating climate change for some time. It's estimated some $70 billion of funding will be applied here in Europe. And what we've seen in the last year, particularly, is specific large multi-billion-dollar funding schemes being announced specific to generate both supply and offtake. And what that's finally done in the last six months or so is we've seen the emergence of industrial scale tenders for offtake across refineries and particularly steel. So CapEx is going into supply, it's going into the downstream applications, and then there's the subsidies on a hydrogen basis. So that's important as our projects move forward and assets will have application to those funding schemes. So in summary, if you look at the European context, we established ourselves here in Oslo back in August 2022 with the appointment of Per. We have been able to progress quite nicely in terms of supply alternatives. If you look at the economic range of our H2Neo carriers, we talk about 2,000 nautical miles, and we're looking at distances here typically of less than 1,000 nautical miles for the key projects that we're looking at. So on a H2 supply basis, we've got the joint development with Norwegian Hydrogen. We are continuing to look at other sites here in Norway, but also the Iberian coast, such as Spain. And further afield, we've been talking to groups in Scotland and Ireland. So that's short distances where we have our competitive advantage, and we're also now extending into Finland. On the shipping side, we're using DNV here in Europe, and we are pending successful prototype testing. We also have the support of Clarksons acting as advisors and working with us with yards and owners. And on the import and distribution side, you'll see there are a number of key ports there that are becoming H2 ready. And the recent announcement of our collaboration with Global Energy Storage for the Port of Rotterdam is important because we now have an import access point to both the largest energy terminal in the world, but also access to the European market. So we see an active pipeline of regional supply of upwards of 250,000 tonnes equivalent of hydrogen. So that's essentially 10 to 15 ships for us. So we continue to have good progress, and that's why we've continued to focus here in Europe as opposed to where we started in Asia. We certainly feel as though things can get done in the next 12 months. So just to touch on the collaboration with Norwegian Hydrogen. So we started this some 1 year ago with the Fjord H2 project. We are looking at other sites in Norway, and then that model is now extending into Finland. The reason why we are in Norway, recognises the lowest cost for grid renewable hydrogen. That's very clear, and you've seen that come through in the recent H2 bank pilot scheme. Iberia and Norway were the two key winners. So we need local partners. They have local expertise in developing projects, and we have a number of sites that we're looking at underway. The GES MOU collaboration is important. If you look at Rotterdam, it's the largest energy terminal in the world, providing 30% of Europe's energy import. They also have ambitions to import 20 million tonnes, so you need a presence there. GES operate globally across the world. They're backed by private equity capital. This site, we were on site a week ago. It's quite clear to us with the waterfront that it has multiple berths. It is very adjacent to road, rail, and most importantly, the pipeline that's being developed. And that gives us connection not only to the port customers utilizing hydrogen in the near term, but also European market access. So GES will own and operate and finance the terminal, and together we're working on feasibility, of which that they would fund and build and operate, and we would support with the marketing of imported volumes. So that's specific to our compressed hydrogen carriers. So that's a very important aspect going forward. So just on the program, where are we? There's a lot of focus. So we have been through 3 years of technical design and approvals and studies and safety studies around the H2Neo ship. We did receive feeder design approval back in December 22. We spent quite some time now working through an optimized design for the tank and integration of the ship. And I'll now hand over to Per, who will touch on some of the key elements we're working around class approvals.
Thanks, Martin. So yeah, as Martin mentioned, been through 2 levels of class approvals: the approval in principle and the FEED level design approval, and moving ahead to obtain the final class approvals prior to construction. We have to do a prototype construction and testing, and we've selected a partner named Protex up here on the west coast of Norway, which is shown in the middle bar on this chart. They come from a shipbuilding background and experience here in Norway. They spent a number of years bringing automation and robotics and laser welding into complex steel construction. They set up the factory as shown here back in 2018. And we started working with them based on their experience on automation when it comes to large steel structures. So we built up the robotic cell as shown there for the prototype below, and moving ahead with that prototype tank construction at the moment. The key building this up is to make a scalable robotic cell, so that we can go from prototype to 1 to 5 to 10 ton and the H2Neo tanks using the same methodology and all the same procedures. So we see that the prototype here will be completed with testing and approvals and at the end of the summer, so mid 2024, and then we can commence scaling up to larger stationary storage applications and the 5 to 10 ton tank capacity towards the second half of this year, and then go into taking FID on an H2Neo size tank construction within the year as well, so that we can start constructing of those in 2025 and have tanks for the shipping aspects ready by the end of 2027, 2028 is the target for the large export projects as well. So things are moving ahead according to schedule. And I guess if you move on to the next slide, Martin, then we can look a bit on what we've done recently on the H2Neo as well. So when we work with projects in the automation, we've been looking at how we can optimize the plate thickness and the welding and essentially the weight of the tanks. We've been able to go from thicker plates to thinner plates by using automatic welding and keeping costs very competitive. With that, we're reducing the weight of the tanks, and that gives us sort of benefits on the rest of the ship as well. So we reduced the tanks weight quite significantly in order to kind of optimize then the fuel, or sort of the size of ship, the operating draft, etc. We reduced the length of the ship somewhat from 212 meters to 205. By reducing that, we reduced the weight of the hull even further, and we come down. If you want to look on the initial size that we had on the H2Neo by a year ago, we reduced the the rule length, as we call it, which is the driving length of the ship, setting the scant lengths on the hull by about 12 meters. That sort of gives us an overall weight saving on the hull of about 1,000 tons, which is, you know, looking at sort of a capex size. It's sort of savings in the $1 million range. We've looked at how we can, and we've been working with shipyards on this. We've looked at how we integrate the tanks. So looking at kind of how we can install the tanks by crane, by heavy sort of rollers, SPMTs, and working with some selected Asian builders on that aspect. So overall, we're sort of moving through optimizing various aspects of both the tank weight, how we install it, and how we see sort of savings here, both on steel, and then labor, and then dollar savings on the hull themselves. And all very positive development on all those aspects. Working with DNV up here in Norway now as well on the class approval side. They're going through the updated drawings. They will also be very much involved or they are very much involved in the prototype construction and testing. And the dialogue with the Asian builders, where we are working very closely with Clarksons on the shipbroking side, is also very positive feedback from them so far. They are looking for options to build ships to the industry for hydrogen transportation. So there's a lot of interest from some of the yards we started the dialogue with. And as shown here, we're well ahead into the prototype tank. And I guess if we move ahead, Martin, to the next slide on that. We're building the prototype tank shown here. We're building that up into segments, so end caps on either side, and then we're building the cylindrical part in two parts. There'll be a joint in the middle, and that's in the prototype tank, because that's how we are going to put the H2 Neo tank into the hold as well. So the H2 Neo tanks, H2 Neo tank size, when we install that, it's going to come in 3 sections and have a joint in the middle, and from each of the sort of half cylindricals to the end caps. So we're building the prototype tank up exactly how the H2 Neo tank will be built, and that's what we're testing. It's being built at the facility shown here up on the northwest coast of Norway. The prototype tank has the dimension as shown here. It's a multi-layer tank, multi-layered with 8 layers of carbon steel and 3mm stainless steel internal barrier to protect the carbon steel from hydrogen permeability and embrittlement. So it's essentially just a scaled down version, both in length and diameter and thickness compared to the overall H2 Neo tank. Protex is helping us on the construction side. We are then working with DNV, ABS, and Sintef, and in close dialogue here also with Innovation Norway on how we're going to take this forward from prototype through to sort of mass production of tanks from a facility here in Norway that we can then sort of license out to the rest of the world later on. So if you move forward, a lot of focus in order to build this into a scalable solution. We need to build up the robotic cell, which is shown here down to the bottom left. So we built up the digital twin, 2 jigs in place, which is the cylindrical part and the end cap, and the jigs kind of built up so that they can be scaled up both in diameter and length. So the very much the key of what we've been doing here is to build up the digital twin in advance of starting any construction. It's all about making sure that the 2 robots shown here, one is the materials handling robot, the other one is the laser robot, that they can work effectively in tandem, that they don't clash. And so pretty much all steps are being programmed in advance and tested in a digital twin environment. And it's very interesting for us that were up there last week to see, you know, how we've gone from digital twin to actually producing tanks and sort of sitting back and watching things happening in real life now, and not just on the digital twin side. So to go on, we're using laser welding in the construction of this. So a number of reasons for that. Projects have been using laser welding for years, and kind of similar applications have been building a number of steel bridges up here, where they're seeing the same level of requirements on weld quality and performance to what we need here on the tanks. You know, looking at the same level of impacts from trucks rolling over, etc., and having to survive a large number of fatigue cycles. So the weld procedures that they have used on the bridges, we can use on the tanks as well, and they have they've proven really high quality results on the welds. By using laser welding as well compared to more, you know, conventional MIG and pulse gas, you're introducing a lot less heat, you're using a lot less energy, and you're able to essentially just weld at a higher rate and having less impact with heat affected zones on the welds itself. You can do it all by one pass. You can get a lot of benefits, both sort of schedule wise but also results wise. We can use the lasers to have continuous feedback from the laser head as to the quality of the weld, and have a 100% record of all the welding that we do. So what we've seen in the development so far is that the cost here of the tank by going fully automated is that the cost of the tank is going to be 80 to 85% just material cost, and the material cost is then the steel plate and the electricity, and that sort of compares to conventional sort of complex steel structure where you're looking at a 50 to 55% sort of material to labor cost split, and right now we're bringing that, you know, change to 80 to 85% of the cost of the tank is just going to be the materials, and that as a big step in cost savings. To go on, I think the key, you know, by using the robots here and seeing the results that we see now is that we're able to get a very high level of quality assurance of what we're doing. You know, Protec's experience when it comes to robots here is you know, using off-the-shelf robots, but optimizing the different materials handling and laser sort of heads, as you can see on this image, to have the, you know, the exact measures and quality assurances of what they're doing. So as we put the, you know, plates in place here, etc., we're able to get down to very high level of tolerances and nanometer sort of specifics as to where we put the plate and how the welding is done, and you know, giving us assurance that the quality of the tank that we get is a very high level. So
Okay.
Yeah, if you want to take it from there, Martin.
Thanks, Per. So I hope that gives everyone a snapshot of, I guess, you know, the first visuals that we've seen out of the prototype project up here in Norway. We'll continue to make, you know, more detailed updates as the month of, you know, May and June goes on, and update where we're up to. I guess the last point of today, we've started to talk about the opportunity for a very large addressable market, that is for industrial hydrogen tanks, be that in either maritime or static storage applications. So these are small scale standalone tank applications. So the reality is that buffer storage for intermittency of renewable power here, it creates flexibility and lowers cost of hydrogen. So every application will typically have some level of storage, or if you can apply storage, it adds flexibility and and optionality, and sometimes cost advantage. So the market applications for these sort of 1-ton tanks is typically led by the composite materials, so short duration, localized storage, and typically come low weight for mobility, but high in cost. So we're actually going the opposite way. So our tanks will not be lightweight, but they will come at a cost advantage and suitable to those fixed storage applications. On the right-hand side, you can see some analysis from Longspur Research out of the UK, who have made an analysis around what the differences of 1 and an 8 to 9 ton capacity storage would look like. So carbon fiber and glass fiber, multiple bottles stored in a container versus ours as a singular unit. And just one example of here in Europe is the refueling market opportunity. There's been legislation passed last year. It stipulates that there's a minimum 1 to 2 ton hydrogen storage capacity required for the identified 657 hydrogen refueling sites. Those sites need to be deployed and as agreed by the 27 member states by 27. So there's a deployment activity that's kicked off this year. You've seen the first of those stations, but by 2025. So we will continue to look at analysis and share some market scale, but we've already seen early indications of interest for storage applications here for supporting hydrogen supply projects in Europe and also maritime applications. So we'll look to make more updates post the prototype. So I guess just in summary, we've been advancing our key milestones through 23 and 24. We appreciate for shareholders that sometimes some of these things take a little bit more time, and we haven't been able to always have full disclosure on all the activities we're doing. But I think importantly, the prototype and final class approvals is an enormous milestone, not only for Provaris, but it will be the catalyst for a number of initiatives across our portfolio. The focus of industry on that is quite high. We were just at the recent World Hydrogen Summit in Rotterdam. We had a number of people come up to us indicating the future potential of our application. So I think we've been showing the validation of the work that we're doing. The opportunity for small tanks being ordered and sold and in 24 changed the proposition of our company. It's a very low capital intensive approach to get into the tank business. As Per mentioned, the facility is already there. The production cell is being refined on the basis of the prototype. So it's a small scale up and support here from Norway to create an export business. We have been able to progress quite well in the last few months with certain utilities. That's then translating what we see as more binding agreements coming forward for H2 supply and shipping in the second half of this year. I think everyone's looking for moving from MOU level agreements to binding. I think that's going to occur for us in the near term. And also between the evidence that we've shown with the utilities and the prototype, and we see that there are a number of hydrogen supply projects that are moving through feasibility towards feed level studies that are now looking at a compressed hydrogen solution. So those that we can be involved with on the production side, or those that we are just providing shipping services only. So the shareholder creation that we're building here is near term shipyard contracts and visibility on financing terms and potential owners. There's revenue from tank sales. I think the first project FIDs here in Europe can occur in late 2025, which will put us on track for 27 or perhaps 28 for first exports. And we'd be looking to have, in some instances, equity share in those supply projects. So the opportunity is quite clear to us. There are no other real alternatives for supplying bulk scale hydrogen outside of pipelines, and we'll need to see a lot more supply before pipelines become the preferred alternative. So shipping exists across LNG and all other forms of energy today, so we don't see any different for hydrogen. Just a quick snapshot on the corporate overview. We have nearly 600 million shares on issue, still a modest market cap of 27 million. So the reported cash position as of March, and then you saw recently that we announced quite a flexible and unique structured facility with Macquarie Bank, which is in essence, a standby facility. We've issued, $500,000 in bonds, which has already come down to 440, and that 2-year facility gives us options as we move forward. So we do have a share purchase plan currently live in the market. It's an offer to raise up to 2 million at 4 cents. We think the attaching 1 for 3 option adds a bit extra to that offer. That offer opened on the 6th of May and it closes this Friday on the 31st of May. So that additional funds will support our ongoing technical and commercial activities here in Europe, and also get us through the prototype phase. So just in terms of summary highlights, so leverage the European policy actions here, which is mandating use of hydrogen. Our unique IP and innovation sets us apart from everyone. Compression, proven technology, and that gets us to the first mover advantage and the lowest cost supply. We've talked a lot about the pending shipping approvals, which I think is key. We're seeing a lot of attention and focus on us now to get that done. And that's showing in the interest from German utilities seeking gaseous supply and their end-use customers, which are typically using gaseous hydrogen. So we will continue to advance projects in collaboration with local partners, and ongoing, there are always multiple pathways for funding, whether it be grants or incentives here in Europe, or different funding alternatives that we've seen through development. So with that, I'll hand back to Mel and take questions.
Thanks, Marty. One of the first questions we received earlier was, will Provaris apply for the new round of hydrogen head start and the production tax credit of Australian $2 per kilo for green hydrogen?
Yeah, just to talk about the Tiwi Islands project. So we've been very clear in our quarterlies that, for the last year, we've been working with the Tiwi Land Council on trying to achieve land agreements and economic package. We've been continuing to have dialogue with the Tiwi Land Council. That project was advanced through to, we would call, kind of almost pre-feed level status. It is a large project of capital and scale, and we also need to see that there's an effective base around offtake in the region. So the schemes that were announced by the Australian government last week, I think it was, are important for the industry. The Head Start is a boost for projects like the Tiwi, and we will continue to look at that. There are certain criteria and maturity levels to which I think the Tiwi applies. And in terms of the $2 per kilo tax incentive, well, I think we still need to see more details, but I think it's very encouraging that the Australian government is getting behind the development of hydrogen projects, be that domestic or export. And I think the Tiwi project, if it was as clean as $2 a kilo, would benefit greatly from that, and would put us as one of the lowest cost producers.
Thanks, Marty. And when is Provaris demonstrating its first compressed hydrogen shipment? Could you give details on the route and quantum of hydrogen?
Yeah, so we're not going to develop a small scale ship for demonstration purpose. So the prototype testing and phase that we've just spoken about is our final stage of approvals. We've seen that in LH2, they demonstrated through the CISO frontier, but they were demonstrating the full supply chain. So it was more about, could you liquefy, store and transport? So most parts of our supply chain are proven apart from our tank design. So we need to demonstrate that will work in pass-through fatigue cycle, and then we'll move through to a full-scale production scenario.
Thanks, Marty. And has the final approvals from the Environment Protection and Biodiversity Conservation process for Tiwi H2 been finalised? And when is it expected to go into feed study? Could you just expand on the answer you previously gave on Tiwi?
Yeah, so the drafting of our post, so we made a referral application which was accepted, and then the full application was under draft. As again I said, we've been quite clear that we've put that work on hold pending outcomes of progress on end market, but also agreements with the Tiwi Land Council. So that status, we will make some statements in the forward quarters around whether we continue to reinitiate that work. So it sits there as in draft mode, and we haven't lodged that application at this point. Next question, Mel.
Sorry, Marty. Who are the potential buyers of the renewable hydrogen at this stage, and what is your target for signing purchase agreements, MOUs?
Yeah, so here in Europe, we focused on the German utilities. They would be the counterparties for future purchase agreements of supply of hydrogen, and then they will look to then deploy that within their portfolio. So their downstream, customers are steel mills and other industrial applications. So you've seen evidence of some of those utilities already sign HOAs for supply for steel mills in particular in Europe. So the utilities will be the counterparties to any projects, I would say, at this point that we have here in Europe.
Great. And when will the H2 Neo and H2 Max go into construction and be ready?
Mm-hmm. Yeah, so as we just pointed out, so the H2 Neo is our focus. If we get the successful outcome of the prototype testing by mid-24, that's final class approvals. And then we will be working through LOI with shipyards for final capital costs. And then in parallel with the project, would shipping then take FID for shipyard contracts in conjunction with the project. So that timeline at the moment, it can be aligned for a late 27 or the start of 2028 as first production and ships on the water.
Great. Okay, so what is the timeline to feed construction and commissioning of the Norwegian project for green hydrogen?
So the work that we've been doing with Norwegian Hydrogen, so the Fjord H2 project as an example, so that is awaiting an allocation of power capacity here in the process that takes place in Norway. So that is ready to move into pre-feed at some point this year or next year. There are other projects that we're talking to about utilizing our compressed solution, which are looking to make feed decisions at the end of this calendar year. So we'd have to wait for more updates around those projects.
Thanks, Marty. And then is there any feedback from the Gen H2 pre-feasibility study? I understand the collaboration is over. Are they still considering the Provaris carriers as an option? That's from Giles.
Yeah, so from our perspective, the pre-feasibility study we did with Gen 2 was both technical and economically feasible. It was reflective again of what can be the benefits here. We published a range of pricing on different scale, which we feel is competitive to all alternatives. And then we continue to have a dialogue with Gen 2, and we'll have to see what the next steps are.
And here are some more macro questions. How do you think the pre-commercial stage for green hydrogen is progressing worldwide? Is there a slowdown due to any reasons such as rising costs or slow-moving policy settings? Any other trends you'd like to comment on?
I mean, our view would be that the market focused on gigawatt scale projects, which hasn't been successful. Those projects now that are seeking around the 200 to 300 megawatt scale are probably also some of the largest projects. We do see some of those projects that have taken FID and started construction. Costs are certainly higher than what was spoken about by the industry for some time, but that wasn't a surprise to us. So we've been talking about costs for some time being more realistic than what was being provided. So I think the reality is that there are now, we've mentioned here, there's some capital and operating cost incentives that programs now being in place. H2 Global, the H2 Bank Innovation Fund. We've seen a number of billion or $1 billion plus subsidy rounds now get appointed to both supply projects and end user applications. So those projects are looking to deliver into 2027. So we hope to see some of those start to move through into construction. I think the last point I would make is that the reality is that what we see as the end user is that there's been a focus on smaller scale projects, 30 to 40, 50,000 tons, which can be then sold into a market that's emerging. So I guess it has taken a little bit longer, but we still see that the long-term market potential there is the same.
Thanks, Marty. I think in the interest of time, we might hand it back to you for final comments, but if anyone has any specific questions, they can feel free to email me. My details are at the bottom of the webinar announcement.
Yeah, I think the final comment for our shareholders is that we're making excellent progress here in Europe. I think the decision to focus and open the office here in 22 has paid dividends. We now have the right attention of the industrial customers that can ultimately sign offtake, and those are the utilities in Germany. There are multiple supply project opportunities. I think we've demonstrated with Norwegian Hydrogen, we've released some economics to date that show that we are lowest cost. And I think the reality is that most other supply into Europe is coming from what they refer to as the ammonia supply chains. And I think the strategy is still the same, is to have ammonia terminals for cracking and then discharge into gaseous pipelines. But the reality is we deliver gaseous hydrogen, which is what is typically the use case for decarbonisation in industrial applications. So our solution is becoming more relevant, and I think the pending approvals that we have in place this year will be the catalyst for further binding level activities for our company, and that's the value creation that we're looking for.